What's up, everybody? Welcome back to another video. Today we have a special day because it's a very big day and it's the last day of the week, so I'm hyped to end the week on a great note. Especially yesterday after I had a red day, I actually took a negative $8,000 loss, and it kind of sucks when you take a loss because you always got to reset and make sure the next day you're not either chasing the loss or you're thinking too much about it, or it's just a distraction. So just glad to get out of that stump from yesterday, and today we came back with vengeance and some revenge, but wasn't revenge trading. It was actually very good setups and very great trading. I actually feel like I executed almost perfectly after yesterday executing horrendously, because yesterday was actually supposed to be a green day. I just held things for too long. It was just a messed up day. So today I'm currently up $18,000. I mean, if you want to be extremely technical, I'm $97 off of, or since you want to be extremely technical, $96.50 off of, 18,000. But whatever, $17,903.50 for the day. We'll talk about the plays and what were the good setups, what were the bad setups. Just because you have a green trade doesn't mean it was a good trade. It just means it's a green trade. Just because you had a red trade doesn't mean it was a bad trade. So you got to think about that. A red trade can be a great trade. You took the right risk management, the biggest probability trade. Just because you have a red trade doesn't mean it was a bad trade. It just meant, it just didn't go your way. Just because I have a green trade doesn't mean it was it was a good trade. It just means I came out green. It was probably bad risk management. It could have been, a bad probability trade, a lucky trade, all that good stuff. So let's go in order, right? The first one, we started the morning off with a banger. Let me show you guys what I'm talking about. So Amazon, had my eye on this since yesterday, actually, and let me show you why. So this is Thursday, this is Friday, and this is Wednesday. Today's Friday. So Wednesday, we had a gap up on Wednesday overnight. The stock went from 31.40, left a gap all the way up to 31.84. Left a gap, right? So when gaps happen, we already have another video on gaps, on how they get filled, why they get filled. So it left a gap, and I thought it was going to happen during the day. As you can see, it consolidated, then it pushed, and I was like, maybe next day. Next day it pushed, but then it started selling off, and we got close. And towards the end of the day, we actually initiated the sell-off. We actually initiated the gap fill. But we never came through with it because it was towards like the last 10-15 minutes. So usually you want it during prime day hours, from like 9:30 to 1 Eastern time. Obviously it could happen after. No matter what time it can happen. But the last 10-15 minutes aren't the prime time that you want gaps to be filled. So let's look at this. Actually, let me not zoom in. So this morning we made a quick low, right? I decided not to get in. Wait, is this the... Oh, no, this is the one. I decided not to get in on this one, and this is the one I heavily missed out on, right? So the gap it initiated was from 31.70, right? So I was like, let me just wait. I waited for the morning. It consolidated in the morning, candle down, candle, a mid candle right here, indecisive candle, and then you had this candle, and then you have the up candle, and then a down candle, and then I waited for the break of 31.70, which was right here, got in, dropped all the way down in one candle. Well, that's the 5-minute candle. Let me show you guys the 1-minute candle so you see what I'm talking about. All right, so this is the 1-minute candle. I got in on the 31.70 break, so right here, and I ended up selling at like 31.54 right here, 53. This had room all the way down to 31.46. I wish I held for one more second. It was literally one more second. It was on this candle that I sold on, and it ended up filling the whole gap. Minus obviously a few dollars, but it ended up filling most of the gap. So let me show you the gap. It was from 31.40 to 31.84. The reason I didn't get in right at open was because we actually made a low yesterday of 31.70. So I waited for yesterday's low to be broken, and then we dropped, and this is where I exited at 31.53, and it dropped all the way down to 31.40. So it filled the gap right off the bat. Let me decline that call. Sorry about that. And then it ended up, bear flagging, came right back down. I should have got back in on the 31.40 break, which was the end of the gap fill, because this was the easy one. Look how crazy this one was. you had a 31.40 break all the way down easily to 31.13, and it just kept, you know, sliding to 30.83. So this was a great, you know, a great play. You love setups, you know, not just resistance and support breaks. People always ask that. Do you always play resistance? No, I play great setups. You know, I'm not trying to be in the trade guessing if it's going to go up and down because I see, you know, a raccoon pattern. You know, people just come up with any type of pattern in trading. So, you know, that's the Amazon trade. Now, that was a great trade. I feel like I executed almost perfectly. Obviously, you can't execute a trade perfectly where you hold from the very beginning to the very end. But I did my best, and I feel like I did the best for the morning trade. I should have got back in and see if I could have executed even better on the second one. Facebook, garbage trade. Let me show you what I did with Facebook. Facebook, I used the 267 level. Let me show you it on the 20-day. You'll understand what I'm talking about. So the 267 level, it kept, so look, this is the 267 level. Let me put this on the 5-minute. It actually looked better during the day. All right, so 267, yesterday got rejected. And then during the day, it actually broke. So after the Amazon trade, it ended up dropping, but it only dropped to 266.08. Got in, got right back out. Terrible trade. It was when the market was like recovering a little bit. So the market ended up bouncing. It bounced all the way up and then came right back down. So I should have got in on the 266 break and just waited for it over here. But I ended up getting in the morning right after the Amazon trade because I was hot. So I was like, next trade. I got in and I realized I just made a mistake because the market was dropping so fast. So I call it a falling knife. A lot of people will get into falling knives and not care. For me, I feel like falling knives are a little bit dangerous because you could get an immediate bounce out of nowhere. So I was like, oh, wait, whoa, this is a falling knife. Let me chill. Let me get out this position before it's too late. Took the trade, walked away. And that was the Facebook trade. It was extremely terrible. The Nvidia trade, spot on. 43% on Nvidia. Let me show you how I did that. All right, Nvidia, same thing as Amazon. We had the gap, and I know we had to initiate the gap. Yesterday, we got so close to initiating it in the last few minutes of the market, like Amazon, except it didn't initiate it, right? So we got to 486. We didn't break it. Today, we did break it. So let me show you what we did here. We got into the let me just make sure I'm looking at the right thing. Yeah, there we go. That's the candle. All right, so this is the candle. It's from 486 all the way down to 475. So what I did was I waited for the break. Let me show you guys the break. It was right here, this candle right here. It was actually this particular candle. Got in right here. It dropped. This is the 5-minute. Remember, this is on the 5-minute. Let me show it to you on the 1-minute because the 5-minute looks like it was quick as hell. But look, this is where I got in. The 46 break, let me show you. It was right here. I got into this candle. It dropped all the way down to 44. I was like, and then I was up 20%. I was like, let me hold. It consolidated for a sec, and then another big candle down, and I ended up selling right here on this candle. Honestly, I sold perfectly. I executed that trade perfectly because it ended up bouncing and then bear flagging. But if I was looking for a full-on trade to take that type of risk, I was playing with same-day contracts, so I want to be quick on those. I don't want to be in, you know, random bounces and all that good stuff. But if you look at it on the 5-minute, it actually looks extremely smooth. It looks like it never, you know, recovered. But it came back down all the way down to 476, and it filled the full gap. So 475, look at that. You can literally line it up from top to bottom. See what I'm talking about? So 476 all the way up to, from 486 to 476, $10 move. I wish it was like a 250% trade if I held the whole thing. I got 43%, perfectly happy. It was late in the day. I think it was around lunchtime. I usually don't trade during lunchtime just due to volume, but this ended up working very nicely. So Nvidia, and those were the 3 trades. Peloton, I actually played earnings last night. I was green at open, $150. It was a terrible earnings. The morning just sold off, and I didn't get to sell in time, so I sold for an $800 loss, but I had $8K in it. So it was technically a great, a great risk versus reward on earnings, because usually on earnings it's a hit or miss where you're hitting or you're losing 100%. At least I lost a few percentages here, and on a scale of an 18K day, $800. I don't mean that it means nothing, but it was a good risk versus reward play. I just played it for fun. I don't play earnings, honestly. So Peloton, so much hype behind it. It was great this morning. It was up like 10%, but it needed to move like 14% to be nicely green. But I was up like 150 bucks, and then when I went to go sell, by the time I went to go sell, I was red. So those are my trades for the day. That's how I made $18,000. Very clean trades except Facebook. So I hope you guys enjoyed this video. I'll see you guys on the next one. Peace.